Hey everybody, hey, Lindsay Davis here with Spartan Invest, and I'm so excited to welcome back Heather Melson with Pearce, Bevill, and sorry, say the whole name of the accounting firm.
Pearce, Leesburg, and more.
Yeah, so she is back joining us to talk more about the CARES Act. There's been so much conversation, so much communication, and so she's really here to break it down, what all of the second wave of funding means, forgiveness, hey, long-term, the effects, everything. So we're really excited. We had so much positive feedback from her first visit. She just did a really good job of kind of breaking down everything that you needed to know, kind of consolidating all the information. So we're really, really excited to have her back. Thank you so much, Heather. I really appreciate it.
Yeah, no, thanks for having me. I know this is kind of a hot topic and a lot of excitement around it when we saw more money released last week. So kind of a second chance for those who didn't get in on the first round of funding. And we think this time is going to be a little more regulated, so we might be able to see it help the smaller businesses more than we saw last time. Last time it was kind of a rabbit chase to whose bank was most prepared to launch it, and that was who got the funds last time.
So did you see that not necessarily go to the smaller businesses, or kind of tell us what we saw? It was the banks, but did it affect the larger companies or?
Yeah, so we really saw the companies whose banks were most prepared to process the loans. Those were who got the loans first. And of course, at every bank, you did see where some customers did get priority and did get processed a little bit quicker in the process. So the SBA has come back now and they released some guidelines, definitely shooting at publicly traded companies. They're out, they shouldn't be getting it. They're giving you till May 14th to repay funds if you got them and you shouldn't have got them. No penalties, no questions asked. So I think this time the big thing is they gave priority to smaller banks for processing the PPP loans. So that gave them an opportunity to get the smaller clients pushed through. These would be like your local banks, your local credit unions that typically small business and self-employed individuals are going to be using over your big national brands. So we saw that happen. We also saw a somewhat guidance was giving on you have to be economically impacted negatively by COVID-19 in order to qualify. They're not defining that for us, but the term liquidity has been brought up. If you have access to capital, then that's going to kind of push you out of ability to actually to really need this. Our big concern is, does this include a line of credit? We don't know that. We believe it doesn't. If you use your line of credit for your business normally, that kind of leads us to believe that that's not liquidity because you already have those funds designated for something else. Your big things are, our publicly traded companies. Could they do a capital call? Those are the things that they're looking at now to see, do you really need this money to make your payroll?
So how do you see that affecting the forgiveness portion? So, I feel like there was a ton of information that came out on how to apply, how to get the funds, and you're 100% right. There was no stipulation as far as your company having to be even negatively affected by COVID to receive this program. So talk about the forgiveness. Are they going to not allow companies that amount to be forgiven if they weren't negatively affected, or?
Yeah, so they say that you have to certify in good faith that you are needed, and the bankers can take your certification as accurate. So we do know that loans $2 million or more, those will be audited by the SBA to confirm that they were used for the correct purposes and that they were needed. At the lower level than that, we don't know if they're going to have the manpower to actually do that, or if they're hoping really just to kind of everyone will do the right thing and follow the guidelines.
I gotcha. So, but after the second wave comes through, what does that do for the forgiveness portion? Is this going to change?
So our forgiveness, that's kind of the big question. We're getting a little bit of guidance on it, still not exactly what we were hoping to see by now. Some of our clients, they received their PPP deposit towards the end of March. So now, we are halfway through at this point. Of the forgiveness period. So I think the earliest deposit I may have seen was probably like April 10th or 11th, I want to say. So we're halfway through the period. We're not really sure 100% planning ideas for this period, we're seeing our basic stuff, payroll expenses. We know it's called the Payroll Protection Act because they want it to replace America's payroll. So if your expenses and your planning is involving your employees and your payroll, chances are you're going to be fine regardless of what the guidance is. We've got really kind of 3 layers we have to get through on forgiveness. Our first layer is 75% has to be used for payroll costs. This is gross wages of your employees and their benefits, health insurance, retirement, any benefits that you provide for them will qualify there at that point. So our next layer we have to look at is, did we bring all of our employees back? So that's kind of the big thing is, and they don't have to come back. So if you send written requests for them to come back, they can deny it, and the SBA says that will not hurt you. Like, you just need to have proof that you sent them a request to come back and they chose not to come back. But you need to invite everybody back. So there will be a fraction to kind of limit out your forgiveness. So if you had 10 employees before, you've only got 9 full-time employees, just kind of a basic sense, you're going to lose 10% of your forgiveness for that one person that did not come back. It gets a little more complicated and convoluted because then we've got to look at full-time equivalents. So I think we're saying right now 30 hours a week based on other guidelines is considered full-time. That leads us to believe we could still apply it to this as full-time. So if they're working 30 hours a week, they count as a full-time person. And that would be how we would compare 2019's numbers to where we are since March 12th. So we want everybody back. The next thing is, are we paying them what we were paying them before? That's kind of, if you're under 80% on paying them, then we're going to start reducing what they're making or what your forgiveness is. So if someone made $50,000, but you only brought them back at $30,000, you are going to get a reduction for every percent less than 80 that you're paying them. So those are kind of where we're seeing where we're going to lose forgiveness. And we lose our forgiveness, it does become a 2-year loan at 0.5% interest paid back to the bank.
On 0.5%.
Yeah.
So, sorry, there's an ambulance going by. I don't know. So, and I'm looking at kind of the talking points that you've got. So for like the future of the CARES Act, what do you foresee a third wave? Because companies are just now starting to kind of sort of open up, and we still don't know what that looks like. So have you heard anything or what the future holds for?
Well, that's been a big thing of people saying, I've got my PPP and I can't open, I'm a restaurant, or I'm a gym, I'm a salon, I'm something that's not allowed to open right now, or I'm a dentist and I can't get the PPE I need to be able to see patients, or I'm losing money because of the amount of PPE I'm going through to see customers. At that point, we've got people saying, why can we hold off and push that 8-week period up and just stay closed right now? Unfortunately, that's not an issue or an option. Once your money's deposited, your 8 weeks start. So we've got to bring all the employees back, and a lot of people may be paying employees to do nothing or looking to find stuff for their employees to do. So then here's the bigger concern. 8 weeks runs out, and we may just now be opening our economy back up. And now's when we really need to be paying our employees, but this period's gone. Would there be a third wave? I don't know. I feel like we're printing money like crazy in Washington right now, to be honest. So we could. I have no background for it. I mean, like, thinking through it, I would expect that a third wave might be like for New York City. It would be for larger affected areas if we did some additional wave of funding.
Yeah, it's kind of what are the consequences to constantly just thrusting money into the economy, and what does that look like? It's still unknown. So there's definitely risk associated with that. So for the individuals, tell us the kind of the 3 takeaways from this act, and what some are options for some individuals out there.
Yeah, so for our individuals, of course, everyone, we've heard of the stimulus. It's been beaten to the ground. It's out there. If you haven't gotten yours and you think you're eligible, go to the IRS website, big marquee on the front page. It's going to show you if you're eligible or not. You have to put in a little bit of criteria from your prior year return, like your AGI and how much you paid. It's going to show if you're due a stimulus, how much. If you haven't direct deposited in the past or you've always owed money, then you can put in your bank account information and it will direct deposit to your account. Kind of the benefit there is just depending on how some of your investors are set up, some of them may be seeing stimulus that normally wouldn't. Now that we've got passive income, we're offsetting it with depreciation. So we may be seeing some of our higher net worth individuals who are focusing more on real estate and sheltering money from tax coming underneath that earned income barrier. So that's always something out there. Another thing is if you had a baby this year, this is so funny. I've actually had this question by so many clients is, does my baby I just had count for my stimulus? It does. If you don't get a stimulus now, or let's say you were over the income limit previously, but now you're not, you can get it as a refundable credit on your 2020 tax return. So there will be a true up opportunity. It's not like if you don't get it this month, it's gone. IRS, they're not taking phone calls right now. They're not going to look up anyone's stimulus or tell you anything. So don't even try that. The app it's quirky. Some days it works. Some days it gives you an error message. So just keep trying the website if you think you should be getting one. Some of the other things, returns and payments, everything is extended to July 15th. Last time we spoke, Q2 was still due in June. They've pushed it on to July 15th now. I would think if things don't open back up soon, we might see all of that extended a little bit further on. So only time is really going to tell on that. Kind of some of the bigger things that have been kind of exciting for us and really given us a lot of work over on my end are net operating losses. So the Tax Cut and Jobs Act that Trump did when he first came into office, it removed the carryback of net operating losses. So previously, if you had a loss on your return, you could amend a prior year return, carry that loss backwards, and request a refund of taxes you paid for another year based on the fact you had a loss this year. So that was one of the things that went away. Well, it's back now. So if you've got a loss, 2018, 2019, if you've already filed, we can amend up to 5 years back to request a refund of taxes. So definitely look and kind of see what happened in 2018 and 2019. Do you have an option there to go back? This is applicable for our individuals and for our corporate taxpayers. So that is definitely out there. The other thing is there's just a lot of planning opportunity, just really in the stock market and with your retirement right now. Your RMD is not required right now. So once you reach 70.5, you have to take your distribution every year. This year, you could opt to skip it. Market's down. So if you don't need the cash, let's not get it out. Let's let it stay in there and recover. Other things we're seeing is, like we said before, early distribution penalties gone right now. You can pay tax on your withdrawals over the next 2 years if you need to. Again, kind of a last resort. We don't want to encourage anybody to pull money out of retirement early unless we need to do that to keep our business going and keep bills paid. So capital losses, we're seeing a lot of people play with the 475F election, kind of known as the mark-to-market election, and kind of in basic terms, it allows you to treat all of your capital gains and capital losses as ordinary income. So typically you wouldn't want to do that because you want to take advantage of that capital gains rate. But if you've got something that's got a big loss sitting, this might be the year to kind of discuss with your accountant, do you think I can come under 475? Some accountants are strictly against it. Some are a little more aggressive and want to do it. So what we can do there is we make the election, if applicable, then all of your capital losses are ordinary losses. So you get to benefit from them this year. And at that point, buy something that's not going to be a loss or rebuy and just get the lower basis at that point. Kind of a game playing, but some of our clients really enjoy doing stuff like that. So we're willing to help if we can make it work and dot all our I's, cross all our T's there.
Yeah, it just definitely opens up a lot of different options.
Yeah.
And definitely with the volatility out there in the market, please do. Yeah, if you absolutely can, don't pull money out of your retirement at loss. If at all possible, I cannot give financial advice, but that's just our 2 cents. And the same goes for our investor clients as well. You know, a lot of lenders out there offering the forbearance where you can push your mortgage payments. You can either push them a few months, and then some lenders tacking on to the end. But it really messes with your ability. You know, it doesn't affect your credit score, but it does hinder the ability to get financing for 2 years after this happens. So yeah, there's a lot of different plays, but there's also consequences and just some things to investigate. So I did want to get your opinion, and I know this is not really your wheelhouse, but I still want to get your opinion on the act and the increase in the unemployment and how that may negatively affect the ability for businesses to open back up and gain their employees back. You know, a lot of the restaurants, so the restaurant industry, the entertainment industry, the unemployment, especially in places like Alabama. I realize the cost of living is very different and it varies the country, but I just wanted to kind of get your thoughts on what that could possibly do to affect the smaller businesses, especially in entertainment and restaurant.
Yeah, no, actually, I have a good friend who works in the restaurant business, and she told me the other day, she said, I'm making the most money I have ever made in my life right now in unemployment. And I was like, wow, and that is a crazy concept to think about, but a lot of our population is seeing that right now, especially in Alabama and across the restaurant industry. I think she said she's bringing in $842 a week on unemployment right now. And, you know, and that's not subject to federal or to state tax or to FICA taxes. So that's just crazy. I think what we're seeing is people don't want to go back to work. The ones who have got the unemployment, they're happy on it. They don't want to go back. They want to ride it out as long as possible. I've had a couple of clients call employees back and they've said, oh, can I just stay off for 2 or 3 more weeks? I'm not ready to come back. And this is a serious issue. But of course, you know, if you got the payroll protection program loan, you can't okay unemployment anymore for any of your employees. So you do have to kind of send them an offer to come back to work. And if they choose not to, that's fine, but they are no longer eligible for unemployment right now. I think spending habits, I don't know what to think coming out of higher unemployment. I mean, are people going to start living above their means while they have it, or are they going to be smart about it and save it? I don't know how it's going to affect on the individual level. I think it's great for those that need it, but it may be a little bit overkill and possibly should have been kind of scaled for where you live at.
Yeah, that's definitely something that we've seen with everyone in certain industries, in certain areas in the country, is that a lot of people are making a lot more than they were at their previous job. So there's definitely a kind of I don't really want to go back to work.
Yeah.
When does that increase stop with the unemployment?
So you're eligible for 26 weeks. I want to say 37 or 39, one of those two. The increase ends on July 31st currently, but then you're eligible to stay on unemployment, usually 26 weeks, but I think they've pushed that to 39 weeks. So I know a lot of people who think their restaurants and stuff are not going to reopen. They're planning on sitting through July 31st. But I think the bigger issue is that based on everything we're seeing and hearing, regardless of how you feel about COVID-19, I think we all have to admit the world's not going to be back to normal August 1st. We're not going to be at full capacity in our entertainment industry. I've got a good friend whose husband works for the BJCC. Everything's canceled right now. They don't know what they're going to be able to do. And those are large employers in our community. If you look at the BJCC, the Sheraton, all of our restaurants. So I do think when July 31st comes around, we're still going to have a lot of financial issues for a lot of people in our city because we can't just go back to the way it used to be.
Yeah, unfortunately, that's where we're going to see a lot. I don't think that it's going to be an immediate bounce back. I don't know, but you listen to a lot of talking heads. There's a lot of economists out there stating that, versus the U versus the V curve and how we're going to recover. And it's just going to be difficult to imagine an immediate bounce back, especially with a state like Alabama that wasn't near as affected as so many other parts of the country. And all of the restrictions we're still seeing. So is there, so to kind of wrap up the CARES Act, Take Two, and our stimulus, the PPP program for small businesses, is there anything else you can throw to our audience or our investor clients in regards to this, or maybe just some advice moving forward?
Yeah, I mean, I think with our business owners, let's make sure that if you're still paying your employees, you got the payroll protection program loan. If you didn't get it, let's talk with your payroll provider and make sure that you're getting the employee retention credit, which is a credit of payroll taxes to you to help offset some of the income you're paying out. Those are kind of the two big things. If you're taking care of your employees, we want to make sure that you're getting access to the help and the relief that is out there. On the individual level, I think we're all kind of in different situations with this right now. But I think the biggest thing is if we've got a job, it's a lot to be thankful for at this moment. In terms of planning, let's look at what's in our investment accounts. Let's see, can we take advantage of the market right now and make something good come out of it? It's so hard to make decisions right now because we're not really sure what's going to happen because everyone has a different opinion. Is COVID-19 going to re-break out when we open the economy up, or do we all overreact? I don't know what the answer to that is, and it's a gambling game right now, how to proceed financially with it.
Yeah, it really is. The unknown is across the board. One thing that, if you were to try to take advantage of the stock market, watch very closely. Yeah. I know my husband has been glued to doing that recently. Trying to figure out, because he's been quarantined at home as well, so he's been trying to figure that out.
Yeah, so we're definitely recommending just get with your accountant and let's see what's out there. What can we do? I would say the biggest thing is don't sit mute through it. Let's just make sure that there's nothing out there that we could help you with before you just do nothing until tax time next year.
Yeah, that's great advice. Get in touch with your accountant, find out what's available, because like Heather was just breaking down, there is a ton available out to 1099, small businesses, larger business, individuals. There's a ton of options out there right now. So please get with your accountant and find out what this act can do for you. Heather, thank you so much. I really appreciate it.
Thanks for having me.
All right. Have a good day.
Okay. Bye, Lindsay.
Bye. See ya.